Welcome back to MoneyQuest Lab, where you spot quality swing setups before the crowd does. 5 stocks just made my watch list for the week ahead. And number one is TechnipFMC. One quick note for full transparency, this watch list is based on Friday's closing data, the most recent market close. Prices can move at the open, so always check the live chart before you act. Stick around because I'm breaking down all 5, what the charts are saying, the numbers behind each one, and exactly where each setup would go wrong. Quick framing first, quiets. These are swing trades. Ideas to hold roughly 15 to 30 days, not day trades and not forever holds. And here's how they're chosen. Every single market day, my scanner ranks thousands of stocks on 3 things: market leadership, the technical setup, and the fundamentals underneath. And only the names that score high on all 3 make this list. Let's get into this week's watch list. First, the market backdrop. Market in caution. Volatility is ticking up with the VX near 16. Now, today's top 3. Up next at number 1, TechnipFMC, ticker FTI. This is an energy name sized at roughly $27.4 billion, and it engages in the oil and natural gas projects, technologies, systems, and services businesses. Price-wise, you're paying around 20 times forward earnings here. On the chart, it's bouncing off support inside an uptrend. It's been a real market leader, outpacing 88% of all stocks. As for where price is right now, it's trading about 1% below its 50-day average and 29% above its 200-day, though on lighter than usual volume. And the business backs it up, with earnings up 94% from a year ago and sales up 12%. For what it's worth, 21 analysts on Wall Street rated a buy. On the risk side, watch the 200-day trend. If it loses that, the thesis is off the table. On the plus side, there's no earnings report during a normal hold here, so one less surprise to worry about. Let's talk about number 2, FormFactor, ticker FORM. It's a technology company, and it's worth about $11.7 billion, and it designs, manufactures, and sells probe cards, analytical probes, probe stations, thermal systems, cryogenic systems, and related services. Price-wise, you're paying around 54 times forward earnings here. This one's been leading the pack, beating 98% of all stocks out there. On the technicals, it's sitting about 7% above its 50-day average and 76% above its 200-day. Underneath the chart, the numbers hold up, earnings growing fast and sales up 32%. The street's on the same page. 9 analysts call it a buy. Now, the risk. That 50-day trend line is your line in the sand, and lose it and stay below, and this setup is done. And no earnings report is due during a typical hold, so fewer surprises on that front. Let's talk about number 3, Aurinia Pharmaceuticals, ticker AUPH. It's a player in healthcare, and it's worth about $2.1 billion, and it engages in delivering therapies to people living with autoimmune diseases with high unmet medical needs in the United States and Japan. Price-wise, you're paying around 14 times forward earnings here. Looking at the setup, it's bouncing off support inside an uptrend, and it's trading just below its 52-week high. Technically, it's trading about 0% above its 50-day average and 9% above its 200-day, though on lighter than usual volume. Underneath the chart, the numbers hold up. Earnings up 56% from a year ago and sales up 24%. Now, the risk. That 50-day trend line is your line in the sand. Lose it and stay below, and this setup is done. On the plus side, there's no earnings report during a normal hold here, so one less surprise to worry about. Up next at number 4, International Seaways, ticker INSW. It's a player in energy, and it's worth about $4 billion, and it owns and operates a fleet of ocean-going vessels for the transportation of crude oil and petroleum products in the international flag trade. Price-wise, you're paying around 13 times forward earnings here. Looking at the setup, it's bouncing off support inside an uptrend. It's been a real market leader, outpacing 91% of all stocks. On the technicals, it's sitting about 1% above its 50-day average and 33% above its 200-day. And the business backs it up with earnings growing fast and sales up 78%. For what it's worth, 6 analysts on Wall Street rate it a strong buy. What would kill the idea? A clean break under its 50-day trend that sticks around. That's your cue to step aside. And no earnings report is due during a typical hold, so fewer surprises on that front. Coming in at 5, ROST Stores. That's ticker ROST. It's a consumer discretionary company worth around $75.8 billion, and it operates off price retail apparel and home fashion stores under the ROST Dress for Less and Didi's Discounts brands in the United States. It trades at about 28 times forward earnings. Chart wise, it's bouncing off support inside an uptrend, and it's trading just below its 52-week high. This one's been leading the pack, beating 84% of all stocks out there. As for where price is right now, it's trading about 7% above its 50-day average and 27% above its 200-day. The fundamentals are there too. Earnings up 37% from a year ago and sales up 21%. And Wall Street agrees. 17 analysts rate it a buy. Where it goes wrong, its 50-day trend line is the level to watch. If it breaks down and stays below that, the setup is no longer valid, and no earnings report is due during a typical hold, so fewer surprises on that front. That's today's top 3: FTI, Form, AUPH, INSW, and ROST. Hit subscribe for tomorrow's scan. New picks every market day. And remember, this is not financial advice.